US stock AI sector deep dive. Beyond the hype, unpacking profit logic, capex cycles, and market pricing models. We divide the impact of AI on US stocks into 4 stages, and we're currently in the transition from the first stage to the second and third stages. First stage, chips and computing power infrastructure phase, NVIDIA, AMD, Broadcom. Second stage, infrastructure energy and cooling, Vertiv, Eaton, Constellation Energy. Third stage, models and cloud platform phase, Microsoft, Google, Meta, Oz. Fourth stage, software and productivity monetization phase, Palantir, Salesforce, Adobe, Apple Edge AI. 1. Logic shift from training to inference. Latest developments. As large language models LLMs mature, the market focus is shifting from how to train models to how to run models. Impact. This means computing power demand will spread from centralized data centers to the edge. Beneficiary stocks. Apple AAPL, driving an upgrade cycle via Apple Intelligence, bringing AI to end-user devices. Qualcomm QCOM ARM. Power efficiency in phone and PC chips becomes critically important. Risk. If inference costs can't be recouped through subscription fees, software stocks could face valuation drops. 2. Physical bottlenecks. The power shift in energy and electricity. Latest developments. AI data centers consume over 3 times the power of traditional ones. What's limiting AI expansion now isn't just chips, but power supply and cooling. In-depth analysis. Wall Street is starting to price in an energy premium. AI competition is fundamentally an energy competition. Related stock impacts. Leader in liquid cooling tech. AI chips generate massive heat. Air cooling can't handle it. Liquid cooling is a must-have. Constellation Energy SEG, Vistra VST. Nuclear power companies, Microsoft and Amazon are directly buying nuclear plant capacity to lock in long-term cheap power. Essential for power management and grid upgrades. Latest developments. Meta, Microsoft and Google are still ramping up capital expenditures at the hundreds of billions per year level. Core logic. The market's attitude now is, you can burn cash, but you have to prove revenue is growing. If growth slows, the market will question if AI is an overinvestment like the metaverse. Stock focus. WatchMe takes the prime example of successfully applying AI to ad recommendations and directly boosting revenue. NVIDIA NVDA, from chips to ecosystem. Impact logic. NVIDIA is building AI factories. It's not just selling chips H100B200, it's selling the CUDA ecosystem and network interconnects Mellanox. Objective advice. Short-term, watch earnings guidance. Long-term, see if sovereign AI countries building their own computing centers can offset slowing orders from internet giants. Palantir PLT, true software application rollout. Impact logic. Palantir's AI platform is one of the few tools that truly lets enterprises optimize operations via AI. Stock impact. It's the leader in US stock AI software monetization phase. If PLTR performs well, it signals the start of an AI software bull market. If it misses, monetization is still far off. Broadcom Avgo, the throat of AI networks. Impact logic. No matter how strong the computing power, if chip-to-chip communication is slow, it's useless. Broadcom has a monopoly in Ethernet switch chips and custom ASICs. Stock impact. As the computing rep in the non-NVIDIA camp, it's the biggest beneficiary of giants' in-house chip development. If you're building a trading plan, follow these rules. 1. Key indicators to watch: the compass. 10-year Treasury yield. If yields rise, hype AI stocks will pull back first. NVDA earnings day. This is the market's quarterly exam, setting sector sentiment for the next 3 months. Cloud giants Microsoft, Meta capex. As long as they're buying infrastructure stocks, Vertiv, Arista Networks are safe. 2. Position strategy. Core positions 50%. Proven profitability giants Microsoft, Meta, Google. Offensive positions 30%. Pickaxe sellers NVIDIA, Broadcom, Vertiv. Speculative positions 20%. Software apps and Edge AI, Apple, Palantir, ARM. 3. Risk control lines. First principles warning. If signs emerge that AI-driven productivity gains can't cover the massive costs, immediately trim software positions. Technical levels. Use the 50-day moving average as a trend indicator. A break below signals short-term narrative breakdown. Why aren't your AI stocks rising? Because Wall Street is shifting from buying chips to buying nuclear plants. Power bottleneck logic. Has their iBubble burst? Check these two metrics: cloud giants CapEx and Apple Intelligence upgrade rates. Beyond Nvidia, these three stocks are the real winners in 2026 AI competition. Vertiv, Broadcom, Palantir. Our investing in 2026 is no longer about blind buying, it's about finding monetization paths, focus on power infrastructure and end-user iPhones, PCs. This could be the source of the next wave of alpha returns.